Bitcoin obviously had that pretty gratuitous top around 124, right? Came down as low as, the 107s, 108s. And I think 112 has kind of been that key level there. I just kind of have it as a zone here. But obviously, yesterday we're able to finally push through that after all these attempts and now running right into the 50 MA. Bitcoin is like the most technically driven chart you can generally trade of most assets.
At the same time, do we think we're not going to get a chance to buy Bitcoin at its 200-day moving average, which is about 100,000 before the end of the year? I think the probability is very high we will. It's the question what happens after that. And to me, this is what we're doing right. We're at that fun stage, that silly stage right now. Oh, we got the easing coming. Everything's great. We've already priced it all in. How much better is it going to get?
Bitcoin may be trading like digital gold, but its next move could reveal whether it's a safe haven or just another commodity in the world's biggest trading casino. Bitcoin's price action continues to split opinion, reflecting both its technical behavior and its evolving role in global markets. Scott Melker, known as the Wolf of All Streets, underscores Bitcoin's status as one of the most technically driven assets. After peaking near $124,000 and pulling back to the $107,000 to $108,000 range, he identifies $112,000 as a crucial pivot. The recent breakout above that level quickly stalled at the 50-day moving average, a move Melker sees as typical of Bitcoin's chart-based nature. For now, he views the market as sideways chop, with $110,000 as the key support. Holding above could open the path to $116,000 and a retest of $124,000, while losing it risks a drop to $104,000. Mike McGlone, senior macro strategist at Bloomberg Intelligence, offers a broader take, warning that Bitcoin is behaving more like a commodity than digital gold. With over 21 million crypto assets now in circulation, he argues the space is diluted. McGlone notes Bitcoin's relative stagnation versus gold and advises traders to adopt a commodity approach, selling highs, buying dips, and monitoring the Bitcoin-gold cross. Historically, Q3 returns have been muted, but he suggests global liquidity shifts could alter Bitcoin's trajectory. We're still in the early days of crypto's evolution. The biggest shifts are yet to come. Stay tuned, subscribe, and turn on notifications to catch every major move in Bitcoin, Ethereum, and the future of global finance.
I think that's how it works. Listen, I've been saying that for weeks. I don't know if it'll be true, but that's my assumption, just looking at these cycles and extrapolating what's likely to happen as people get bored and move their money. I mean, Bitcoin obviously had that pretty gratuitous top around 124, right? Came down as low as, the 107s, 108s. And I think 112 has kind of been that key level there. I just kind of have it as a zone here. But obviously, yesterday we're able to finally push through that after all these attempts and now running right into the 50 MA. Bitcoin is like the most technically driven chart you can generally trade of most assets. It's pretty incredible. Like you can basically say, hey, when it pushes through 112, it's probably going to stall at the 50 MA. And I think that's what we're having right now.
Yeah.
So I think that this is all kind of just sideways chop. Interesting. Mike, I'd love your opinion on this because you make the point often that Bitcoin kind of was leading the way down, but now we have Bitcoin has been really sideways for a long time and everything else still going up.
Yeah, well, it's so important to go there because you mentioned it's also what's happening. You mentioned Solana or Ether or any other the other ones. That what's happening is what you said, they get bored because there's so much money sloshing in the system. I remember hearing the same quote in 1999 and 2007, and people are just looking what to do with it. But that is the key. Also, key thing you said is very profound. Is Bitcoin is very technical. It is. Almost all these things are very technical. It's just a giant casino. It's wonderful. I mean, compared to the days I was in a trading pit, I dreamed of a casino like this. But let's not underestimate what's happening. And I want to tilt over to a headline I put out today because I've been waiting to put this out for a while. And I have to admit I'm doing it a bit to agitate and to antagonize. And I did compare that we do have, according to CoinMarketCap.com now, 21 million cryptos. Okay, we'll call them what they are. In 2009, there was one. And now there's 21 million. So that's what I think is happening to the space. It's commodified. It's being commoditized. And you can trade anyone you want. Treasurers are tilting away from Bitcoin towards the other ones. And the key thing I want to point out is that Bloomberg Galaxy Crypto Index versus gold has been basically, even though it trades 5 times higher volatility, is unchanged for 8 years. That's not a good sign. That's what I show you in this chart. But what's the same chart syndrome with this chart is the U.S. stock market overlaid with GDP. Let's not underestimate what's really driving everything. U.S. stock market is elevating. That's $4 trillion or so in cryptos. The problem is Bitcoin is becoming less of digital gold now. It's becoming just a commodity. But I want to also overlay that with just the Bitcoin gold cross. This is chart I've been worried about for a while because it's showing me the divergence that I'm supposed to look for as a strategist. You need to look for inflection points, look ahead of the market. It's the same right now as it first traded in 2021. Now, Dave Weisberger always likes to push back on this, but again, it's same chart syndrome with the U.S. stock market GDP. That's the wealth creation effect. And the way I look at this is a commodity traders, you want to sell at the upper end of the range. This is when President Trump got elected. We got another test near 31 and the Bitcoin gold cross. And you want to look for dips to buy. Why shouldn't it go back to 25 and just a normal rotation? To me, this is what might be happening in the fourth quarter. That's why I think the next few months are going to be so telling. Now, if we can stay at these levels and continue with low volatility and continue to appreciate as the Fed starts to cut rates and the economy, the labor market slows down for the recession most of us expected 2 years ago, we never got, that would be wonderful. I look at it just a trading range. You were supposed to be selling cryptos or Bitcoin versus gold a few months ago, and you should be waiting a while to be buying.
From Bitcoin's technical cracks to the Fed's looming rate cut, markets are sending mixed signals that could define the next big move for both crypto and equities. Scott Melker notes that today's market dynamic mirrors the peak altcoin hype cycles of the past, with capital rotating from serious plays like Bitcoin ETFs and Ethereum ETFs into more speculative names. He observes that this pattern has now shifted into equities, where crypto-related stocks function as the new alt season. Melker points to MicroStrategy as a prime example, warning that it slipped below the 200-day moving average, a level last broken before its 2022 collapse, creates a fragile technical setup. With both the 50 and 200-day moving averages turning into resistance, he cautions traders to remain wary regardless of sentiment toward Michael Saylor or the company's Bitcoin strategy. Mike McGlone adds a macro lens, emphasizing that market expectations for easing are already baked in, with a 25 basis point cut at the September Fed meeting fully priced. More importantly, he highlights that markets project rates below 3% by 2026, signaling reliance on monetary fuel. While supportive in the near term, he warns that failure to deliver easing, or deeper cuts signaling weakness, could unsettle risk assets, especially with inflation still hovering above the Fed's 2% target. Let's get back to the interview.
Yeah, it's as bad as the altcoin market was in peak hype cycle of the altcoin market. Listen, I'm wrong about a lot of things, but I was definitely one of the first people beating on the drum of the stock market is the new alt season, right? Anything crypto related in the stock market, that's where altcoin action's happening. That is alt season. I think it really started heavily with eToro and Circle, but these are you know how when we used to get an alt season, there was a lot of money at the top, Bitcoin, and then it would get bored and it would funnel down to Ethereum. And then you would see this great dispersion to kind of everything else, all the way down to the meme coins and back. The Doge pump was usually the last sign that it was time to get back into Bitcoin for the next part of the cycle, right?
You're right.
These are the meme coins. So we went from Bitcoin and ETFs, very serious. The Ethereum ETF started to do well. Circle, which is a legitimate company, doing well. And now you're seeing all that money find the stupidity.
So Gareth, pull up strategy, the first of them all, the foremost, Mr. Saylor. I mean, the deity in the space, they're below the 200-day moving average, MicroStrategy. Last time that happened, it dipped below the 200-day moving average for more than a few days, was the beginning of 2022. Strategy had peaked around 100, like a couple months before, and it dropped to the lowest was 14. I don't see what stops it from going for 100. That's just normal technical analysis.
Mike, what you often say, I'm thinking about this in real time, but what you often say, which I disagree with, about there being millions of competitors to Bitcoin, I do agree there are a lot of crypto companies. I obviously don't agree they're all competitors to Bitcoin, but I do agree that treasury companies are competitors to MicroStrategy. So
they were the first one, right?
MicroStrategy definitely has a lot of other names in the market, as dumb as some of them are and as up and down as they go, that could take away a lot of the liquidity. I mean, I think that argument holds a little more water actually with MicroStrategy than it does even with Bitcoin right now.
So Garrett, you should be buying that right now. The way I see that is as a person, if I'm short and I'm bearish, I remember I bought Lehman at 2 because I was short everything else, and just because I needed to test it. that's a place to test along. And certainly, if you get stopped out of this short, then you double down on getting short. But you should. I mean, is that what I'm wondering? What you're thinking there? Look at that chart. It's right, trend line.
Actually, look at it. I haven't looked at this chart. Pull mine up. I mean, it's pretty interesting. I think we mentioned this maybe last week, but the 50 MA on the weekly is now resistance, which I had not seen. And when you flip to the daily, if you are a moving average guy, you've got the 50 and the 200 above as resistance and both rolling over. Like I don't know. I like Saylor. I'm generally kind of a believer in MicroStrategy, but if you showed me this chart without a ticker on it, I would tell you to run.
Yeah.
It's purely technical, purely from a technical perspective. Like if this said, Skittles candy up in the top left corner, I would say you don't want to buy Skittles here.
Well, that's one thing I enjoy learning in the trading pit. Some of the best technicians I've ever met, most of them either dead or retired, they would deliberately ignore the fundamentals. They would get mad at you talking about fundamentals because it would distort their technical views. And sometimes ignore Mr. Sale. I think he taught me so much, but just look at that chart. What should I do with it? But the key thing is, what does it mean if it continues to break down? To me, that's the dominoes. That could be the first one. Yeah, yes. That's priced in. And then my Bloomberg terminal shows, if I can pull it up, it shows 100%. Doesn't really show anything more than that. What do we have? 107%. So it's just 25. But it does show, what I like to point out, if you get out to SEP 2026, we're already down below 3%. To me, that's the key thing, that the market's already pricing in that easing. It's pricing in that fuel. If we don't get it, that's a problem. And if we get more than that, it might be because the market's telling you you need more. But that's what the market expects. I mean, it's but for the meeting in September for next week, 25 basis points, 106%. So it's not far enough.
I think he's going to cut and say we're going to be data driven moving forward, and we have not made a decision on what to do. The data supports a 25 bip cut here, but we'll have to see how inflation reacts and if there's any effects of tariffs. And if the labor market shows signs of strengthening.
Markets stand at a critical inflection point where technical signals and macro forces are pulling in opposite directions. Bitcoin's price action reflects both resilience and fragility, oscillating between key levels that could determine whether momentum favors bulls or bears. Equities tied to crypto add another layer of volatility, mirroring the speculative cycles once seen in altcoins. At the same time, shifting expectations for monetary easing highlight how dependent risk assets remain on liquidity support. With labor market weakness intensifying pressure on policymakers, the path ahead demands caution. Investors face a landscape shaped as much by policy missteps as by market psychology. Is Bitcoin proving itself as digital gold, or is it on the verge of becoming just another casualty of shifting liquidity and market speculation? Crypto is rewriting the rules of global finance. But in a market full of hype, only those grounded in fundamentals will come out ahead. Stay tuned and don't forget to like, share, and subscribe for more powerful insights into the future of digital assets.